Jack, welcome back to the show.
Hey, John, thank you. Thanks for having me.
Now, Jack, since the few short months since you were on the show, you've had some great achievements, and one of them being the launch of your molecular lung cancer test. Can you tell us a little bit more about the test, and how does that kind of affect your clinical side?
Yeah, thanks, John. Yeah, the interesting part about our lung cancer test or assay is it's not a new test for us. We've already done over 600 tests over the last several years. Effectively, we had it in our portfolio. We just didn't market it. The great part about the test is it's well reimbursed, and it's very effective. So physicians, patients are in fact demanding it and have been demanding it for a while. But even more importantly, it's reimbursed. So above and beyond the key issues in terms of the pricing, reimbursement is certainly critically important. But even more important than that, it's already in the guidelines. So while it looks to be a new product for us, it's really well positioned for the future. Our sales reps and our customers are very excited about it. The nice part about the test is what it does is it allows a physician to evaluate metastatic cancer and lung cancer versus basically primary cancer. So they can determine whether it's originating or whether it's coming from someplace else and how to deal with it differently. We believe it's a very good opportunity for us.
Now, Jack, what's the essential value proposition? Why should investors take notice or buy the stock in Interpace Diagnostics today?
Well, the value proposition certainly hasn't changed. I think what we've been able to do is to basically demonstrate that value proposition in a number of ways. So let me go through a couple of key points that are really important for us. One is we are and continue to be a growth-based company, and we're demonstrating that in our quarterly financial results. Number two is the quality of our products, and certainly gaining reimbursement in multiple areas and expanding reimbursements differentiates us from a lot of people in the space. Number three is our opportunities for the future with effectively the position we're in now with the cleaned up balance sheet, with some of the programs we've launched. We believe we're in a unique opportunity to really even expand beyond what we've done in the future in the end of 2017 and 2018. And we're certainly excited about those opportunities. And I'd say maybe the last reason is we still continue to believe that our stock is undervalued as our story is just beginning to get out into the marketplace.
Now let's talk about your thyroid franchise. Now, recently you received a CPT code from the American Medical Association. Maybe talk to us about what is a CPT code, how will it affect your revenues, and do you expect to get some more CPT codes maybe for the ThyGenX product?
Yeah, thanks, John. CPT code, first of all, is a clinical procedural terminology. What that really means is that effectively the AMA, the American Medical Association, identifies what particular code you're under simply for reimbursement purposes. So another way to say it is that with a CPT code, it's easier to get paid. So that's number one. Number two is, as we look at our thyroid franchise, as you called it, it includes both ThyGenX and Thyramir. The combination is really important to us. And in fact, 90% of our physicians order both ThyGenX and Thyramir. So the fact that we have a CPT code for one of those designations, we believe is a strong expectation that we will have a CPT code for both designations in the future.
Speaking of ThyGenX, you recently announced that Medicare is increasing its reimbursement of the test 40%, which will start on January 1st. What drove that change, and what does it mean for the company, Jack?
Yeah, so ThyGenX has been approved since roughly 2015. So this is not something that happened overnight with basically Medicare. And what's happened is they've watched and evaluated how we've processed claims and assessed basically our cost structure and analyzed our outcome data. And with that, made the determination that our assay for ThyGenX really deserved a higher rating. As a higher rating, we will end up with, as you said, about 40% improved reimbursement. As we look at sort of the Medicare component of our ThyGenX assay, that's about 40% of our revenues in ThyGenX. So the combination looks to be very supportive of some nice expected growth that we're planning for, beginning January 1st.
What else should investors look for maybe down the road, 12, 18 months?
A couple of things that we would consider value inflection points as we go forward. Certainly, one of the most important is continued reimbursement. Reimbursement for us is absolutely key. We've done a good job. We have plenty of opportunities to expand reimbursement as well. The growth of our new lung assay, getting that to the market, getting our sales reps to promote that and discuss it with physicians, and the pull-through of that product should be extremely helpful for us as well. The other items that we think are inflection points as well is continued cost management. We're expecting to announce our earnings for the third quarter about November 15th. We're hopeful that we're on track for our planned growth for 2017. And then as we look at sort of the opportunities that we have, we're in a unique position in that we have a very clean balance sheet, we have capital, and we're certainly looking at other assets, mostly products to be able to acquire or relationships we're able to develop to be able to bring products in cost effectively into our portfolio. What's important to remember is that we really are a commercial company. We happen to be in molecular diagnostics, but we're first and foremost a commercial company.
Jack, to wrap it up, why should investors take an interest in Interpace Diagnostics? Why should they own the stock today?
Yeah, good question as always. I think it's about our prospects for the future and the success we've had in the past. So the success we've had in the past is really a good indicator of the opportunities in the future. Again, we have a clean balance sheet in terms of going forward. We have sufficient capital to be able to move our programs forward in an aggressive way. We're very cost-minded, so we're cost-effective about what we do. We have new products, like our lung product, but we also launched 4 or 5 new expansion products as well. We're looking at the acquisition of other products in the future that are synergistic with what we do. And I think ultimately we have a great management team that has been able to perform and deliver. And then again, I'll say that from a valuation point of view, I think we're very reasonably valued in terms of the marketplace as we look at our competitors. Our story is just getting out there and the awareness is beginning to grow, thanks to you.
Well, thanks, Jack, for coming by. It's always a pleasure talking to you.
Thanks, John. Thank you.